Tonight, we're going to start with the syllabus. Over that. Chapter 10 handout, which is about cash, and we'll talk a little bit more about class, but and then possibly get classical sampling. I'm hoping to get to classical sampling tonight. We'll see. So the first thing let's do is go to the syllabus. Okay, so this is the syllabus, and most of the stuff in here is pretty the textbook and all that. By the way, you should be able to get into the ebook. Maybe check and see if you can. And if you can't, let me know. It shows up in my Laker bundle, so I'm hoping it shows up in your Laker bundle. If it doesn't, go ahead and send me an email if you would. Okay, so the ebook. So let's go back to the I'm gonna let you guys go through the objectives if you want. You know, they're what you would expect from almost any class. Apply the knowledge, analytical techniques, blah blah blah. Course methodology. Of course, this is a Zoom class. It's also a face-to-face. Course materials. Assignments are 20% of your grade. Assignments and textbook problem, those are what we do in class. Those are 20% of your grade. 80% are the exams. And I think I'm going to do something different this time around. I think I'm going to give you guys an exam every week. Now, we only have 7 weeks. So I think we have off for fall break. But I think I'm going to shorter exams and every week, and that'll keep me on track too, because I try to put too much stuff in these chapters, especially with this class, because it's a shorter class. All right, submitting work. Let's look at that. Everything gets submitted through Blackboard. Do not email it to me. Put it in Blackboard. Assignments are usually one due after a week after they're assigned. But if you send in late work, it will be accepted without penalty. Now, your grade's going to look bad until you get it in. But don't worry if you miss a deadline, because you can always turn it in, and right up until the last day of the term. Grade, blah, blah, blah. We are going to do sampling, hopefully. We'll see if we get started. But anyway, chapter 10 is on cash. By the way, just so you know, this class is all about the kind of the nuts and bolts of auditing. It's how you actually do things. It's not general stuff. It's not like, theoretically, what should you do if a client does this or that? It's how do you actually gather the evidence to make a decision about whether they are, whether or not the client is, their financial statements are fairly presented. And week 6, I think we're off, but other than that, we should be okay. All right. Let me go to turning in work, assignments and exams. All right, there's a big, long, lengthy thing I got in here that's about submitting the exams, assignments and exams. They're all submitted in Blackboard. People in class, you guys can turn them in physically if you want. Allowed. Anything PDF you can put in. Scans of completed documents or work notebook paper, that's fine. Pictures, multiple pictures. You work on a notebook and you want to take pictures of it, take pictures, you get 10 pictures, you can put all of them in. Things that are not allowed. Zip files and page files. Blackboard can't read them. It's even worse if they can't read them because they actually sit in the grade book and I can't get them, I can't stop them because it shows that it's pending. And I can't get them out until you guys actually take them out. So zip files are the Windows version and page files are the, so don't think, I know that, you get all these pictures, you go, okay, let's put them in a zip file or put them in a page file. Don't do that for Blackboard. It doesn't like them. It also doesn't like the numbers program that Apple has. So if you could just export them into Excel, if you want to use that, there's nothing wrong with using it, but export it into an Excel and then turn the Excel file in. Okay, I want to show you how I actually put these in. So here's the cash handout. This is the first one, and you can always go there if you don't, if some reason the email doesn't have the documents that I send out, you can go ahead and go into Blackboard and under the assignment, it will have those for everything except for exams. Exams are emailed. So the exams are emailed. The exams are emailed or given out in class because there's going to be different versions of them. And for that reason, I send them out in an email. But everything else, and they still get turned in Blackboard. Okay, so I'm going to go ahead and show you how we put an assignment in here. Maybe. Where's my thing here? I'm going to do something. I'm going to get back and get out and get back in. Here we go. All right. Assignments and exams. So I'm going to show you. So this is an assignment. I want to put it in here because I want to show you guys kind of the way, why you can put in as many as you want. So this is accounting. And this will be classical sampling. And we'll make this do, we're not going to get it done this week, even if we start on it. We'll say November 7th. They're all due Friday. Okay, so I come down here. I'll put the files in that we need. So those of files this up. I will put in the points. They're always 100. Now this is the part that I want to show you guys. How to submit them. I put in single attempt. I put in unlimited attempts. So if you want to put in 10 photos, you can. Or if you turn in the wrong assignment, let's say you turn in the wrong assignment or you turn it in and you realize you want to correct it or something like that, you can always turn in a second one. You don't have to tell me about it. You don't have to say, can you take out that other assignment or anything like that, because you can do as many as you like. And it always goes in at the highest grade, and I will put that submit, and then you'll see it here. And so there is classical sampling. And again, the only ones that don't show up there are going to be the ones that, well, I'll show you what we'll do that too. How about that? Look, we're going to get all this done. Chapter 10 exam. Oops. I'm not sure if we'll get it. Hopefully we'll get it done tonight. I'm gonna put it in. I'm gonna be ambitious and see if we can get it done tonight. Now let's make those red so that people know it's highly dangerous. No files are attached because I will email it to you guys. This will be 100. Again, submissions are unlimited, so that if you turn one in, you don't like it, you don't think you did it right or whatever, you go ahead and do it again. Yeah, for exams, you can keep doing it until I grade it. Once it's graded, you can't do it, but I haven't graded yet. So here is kind of the first week. Cash handout, and I should send out an exam after class. It'll basically touch on the stuff we have in the handout. Any question on that? And again, you don't need to keep this up there, but if you look at it, so the stuff that's allowed, basically pictures are fine. And even for these other ones, like for instance, this number one, if you want to do it in numbers for Apple numbers, you can just take screenshots of it. Send me the screenshots. Don't put them into a page file, but send me the screenshots on them. That's fine too. And you can take screenshots of these other ones too if you like. So any way you want to turn it in is fine, with the exception of these three. And especially these first two, because these first two kind of lock it up on my side. They keep showing up. Okay. Let's go back to the hand. I think we're done with, are we done with the syllabus? I think we're done. Any questions? Okay, just so you know, the schedule here is kind of a rough, I'm going to try to stick to it. But it is sort of a rough estimate of what we're going to be doing with it. But I'll try my best to stick to it. And the only one that's kind of quirky is going to be this week we're off. We'll figure that out later. Okay. So let's go to the handout. Okay, so the chapter 10 handout. And by the way, just so you know, a lot of the stuff that I have in here comes out of the book, and it's also a little bit more, I don't know, interactive, say. So we're auditing cash. Now, again, we're basically going to work around the our financial statements, but just overall, here are the accounts for the income statement. We have revenues and expenses, and here are the accounts for the balance sheet. There's only 5 accounts in accounting, basically, which is pretty amazing. The craziest things you can think of fit into those 5 categories. Whatever the transactions are, they fit into those 5 categories. Okay, of those 5 categories, revenues, expenses, assets, liabilities, and equity, which one of those would probably be the easiest to prove? You wanted to prove the existence of any of those. So you want to see if any of those exist. Which ones would be the easiest to prove if they exist or not?
Assets.
What was it?
Assets.
Did you hear?
Assets, like cash or any other.
Yes, you're right. Assets. Very good. Assets are where we always start. Excellent. So yeah, so we start here. So these are the easiest to prove. Assets. Maybe I should put it ahead of it. Yeah, I mean, you think about it, like, well, in the classroom here, we're sitting in an asset. It's a giant building. I mean, that'd be really easy to prove, right? But you look at things like inventory, that's easy to prove. You look at equipment, land. These are all things that are very easy to prove, and even things like cash are fairly easy. You get a bank statement, right? They have a bank statement with their name on it and it has their cash listed. That's pretty easy to prove also. So we started out with the assets. So that's the first thing that we do is we go through the assets and see if we can get comfortable that the assets are not materially misstated. And again, we're only looking for things that are material. You know, if you ever work in business, you know, like the cashier, sometimes the cash register's off by $10 or, you know, plus or minus or whatever. It's never going to be perfect, but you look to see if it's, you know, material or not. The second place we go is over here. To liabilities. So we really beat up the balance sheet. We go to the assets and we go to the liabilities. So we get comfortable with the assets. Okay, are the assets all accounted for? If they are, we go to the liabilities and we see if we can get comfortable that the liabilities are not misstated. Now, if the assets are not misstated and the liabilities are not misstated, what do we know about the equity?
It would be the difference.
Well, these two, yeah, it's a balance sheet, right? These have to equal.
Oh, yeah. Yeah,
So if these two are okay,
Mhm.
then by default, at least in total, you know, in total, this one should be fine. And where am I at?
Plus
Can't see my,
liabilities plus.
no, I'm over here. All right, let's see here. I wonder, you know, not to sound like a really old guy, but when did this hiding the cursor become a good idea? I hate that. Okay, so this is okay if the assets and liabilities are okay. Yeah. You know, assets minus the liabilities should be the equity. Now, the income statement flows into the equity section. So even though we, you know, the revenues, if the revenues are overstated, as long as they overstate the expenses, you know, in total, the net income should be okay, or else these two wouldn't balance. So we know that the income statement probably in at least the income itself is okay if these two are. So we really beat up the balance sheet, especially the assets and liabilities. That's how we do the auditing of any company. You beat up the balance sheet, make sure that the assets and liabilities are within reason, not materially misstated, and then you pretty much know the rest of the stuff is okay. So let's see how this affects cash and what we do with it. The audit of cash. The cash account is often not material. The overall assets. It's a lot of times it's a smaller amount than say a lot of, you know, buildings and all that kind of stuff. So it's often not material, the overall assets. However, it's arguably the most important account that we will audit. It's a very important account because almost all transactions it's a very important account because almost all transactions flow through cash. Everything eventually goes through cash. You really have to get creative and to think of something that won't go through cash. You know, I suppose you could like trade stuff. You could like you could trade, say, the company's common stock for land or something, but again, you really gotta, try to find things that don't go through cash. If you buy an asset, let's say you say, okay, I buy an asset, but I didn't use my own cash, I bought it on a loan. Okay, that loan's gotta get paid off. The loan will be paid off with cash. So everything pretty much comes through cash. So let me do one more thing in there. Okay. Often the cash account can be audited to 100%. We can, a lot of times, they get 100% of everything that's in the cash account, which is not true of a lot of accounts. You get bank statements. Bank statements come from third parties. It's good evidence, and and so when you get these bank statements, you can prove out their cash. Even if they have petty cash, although petty cash is by definition not material, sometimes it might be, but even that, it gets replenished. It gets replenished through the bank. They will make a withdrawal. You can follow that. You can follow that to the petty cash, and from the petty cash, you can look at the receipts paid out for the petty cash. You can often audit to 100%. And so here's the beauty of it. If there's a cash sale, right? If you have a cash sale, let's go back here. It'll go through cash. Okay, here's another gonna be my old man rants. Why do they make it invisible light blue, the default for these? Okay. And you say, okay, well, what if we do a sale, a credit sale, right? I mean, okay. Credit sale would look like this. Credit sales go through accounts receivable. We collect the accounts receivable. It goes through cash. So any sale is going to eventually go through cash. Now, if it doesn't, that usually means that there's fraud. That's how Enron got caught. Enron got caught because they were showing all of this money coming in, but it was never being collected. Their statement of cash flows didn't match up. Expenses are the same thing. You could have a cash expense. This is going to look terrible. I don't know if I should do this. So if you have a cash expense, expense that you pay with cash, you also have a credit expense. You have an accounts payable. Oops. Spell expense correctly. I know there's a better way to do this. I just can't think of it right now. So, if you have a credit expense, it goes through accounts payable. Okay, and then eventually we're going to have to pay that. We have to pay that. I did that wrong. Don't look at what I'm doing. Stop looking at it. Okay, there we go. Eventually, the cash has to pay off those accounts payable. So we can verify basically everything on this income statement can be verified going through cash. And this is the hardest, the income statement is actually the hardest thing to kind of verify, but going through the cash account, basically you can verify all that. And the same thing goes for these other accounts. I'm not going to make this any worse. But if you buy inventory, it's the same thing. If you buy it with cash, it's got to come out of cash. If you buy it on account, it's going to be accounts payable. You got to pay off the accounts payable. Fixed assets, you buy equipment. Maybe it's a long-term mortgage or something. That's fine. How do you pay off the long-term mortgage? You pay it off with cash. Everything goes through cash. That's the dividends are going to go through cash. Everything goes through cash. So even though the cash account itself might not be material, maybe if it was just a account by itself, you wouldn't even audit it. Okay, it's 2% of the assets, who cares? Or less. But the reason why you really beat it up are that everything goes through it, and because you can often audit it to 100%, which gives you a really good feel for what these other accounts are. May not be 100% of these other accounts, but it will certainly verify quite a bit of it. So the cash account, not material often, but it is a very important one to do because everything goes through it. And you can, like I say, these very material accounts can all be verified through this immaterial cash account. Okay, segregation of duties. We remember it by car. And this is very important for cash. Talk about it in a second. So you're taking the CPA exam and you want to memorize this, you memorize it by car. So the C are custody of assets. A are authorizations. I think record keeping is one word. Let me change that. Let's see if it puts that out. No, it didn't. So these are the duties that we have to have segregated. And when they say segregated, these are sometimes called incompatible duties. They're incompatible. You shouldn't have people with doing any two of these. Okay. So you can, okay, so where are we at with these record keeping? This is where you see accounting people often. We do a lot of record keeping. We're probably the biggest record keepers in the whole organization, although we're not the only ones. We're usually ones that do quite a bit of it. Custody of assets, this could be a few different people. For cash, it's usually the treasury. We do this differently. Inventory would probably be operations. Etc. There could be any number of. Those are probably the two biggest ones. Hey, why doesn't it like that? Oh, grammar. Authorizations, these are approvals. So these are oftentimes, these are managers. Purchasing. So anytime there's an approval that goes on, it's the authorizations. And we don't like to mix these. If you mix them, you can have real problems. For instance, if record keeping, what if someone says, well, why don't we let's have the accountants take care of the bank accounts. They do the bank reconciliation. We should just have them do the bank accounts, do all the checking and all that kind of stuff. You can't do that because you can make the cash disappear, and then you could make it disappear on the records. You never find it. So anytime that there is a problem, when it comes to like fraud or something like that, it's almost always a segregation of duties problem. Okay. Let's see some of the controls over cash. Any questions on this, by the way? Okay, very important account. Segregation of duties is big for it. All right. This is kind of the collection of cash. How do you make sure that when you're collecting cash that it gets to the company and it goes into the bank and all that kind of stuff? What are the controls over it? Okay, so here's what I need to grab a little arrow in here. So this is kind of the flow of things. We get a check. Oops. So where will you let me? All right. Check from Joe Customer. So Joe Customer sends a check to the company. And the question is, how do you know if that check is going to go into and get applied to his account and all that kind of stuff? By the way, when I was going through college, I did this. I didn't know what the controls were. I was actually a maintenance guy, but when they had the checks collected, I had to go into the mailroom. And they'd often they have these counting rooms, they'll have more than one person in there. There was always two of us, and we'd both count up the checks and do a separate checklist, and they had to match. Like I say, I was like right out of high school. In high school, I was starting to be a welder. It wasn't like this was natural to me. But anyway, I came from Rockford, by the way, which is kind of like Detroit. Um, so they would have us count up we'd go through the checks. There'd be two things we'd open up. We'd both have our own list of the checks, and they'd have to match. Every now and then we'd have to go through and see why they didn't match. It was, one of us put it in twice or didn't put one in or whatever it was. So we'd figure that out, and then we would sign off. And then it was this. And again, I was a maintenance guy. He was the mail guy, and but anyway, we would count these checks. This is where I was working for a bank at the time. And so we would have these two checklists, and they would be identical by the time we got done with them. They had to be. And we would give those out to people. And when we gave them out to people, who did we give them to? One checklist went to accounts receivable. Oop. Kind of a short arrow, but yeah. And then we have the other checklist would be sent to cashiers or whatever the equivalent is of the checklist of that. We would also have the actual checks would go to the cashiers. Okay, so let's go up to this one up here. The first checklist goes to accounts receivable. And why does accounts receivable have them? Have the checklist? When I was looking at the bank, this is like people paying their loans and stuff like that. But why do they need the checklist? Anyone?
To see if it's a payment towards a credit sale.
Yeah. Basically, you have to credit their account for these. Whoever sent in these checks, who's this? Joe Customer. Hey, as an auditor, I realize that's a fake name. No, but so this is but Joe Customer wants to know that his check would be credited to his account saying, okay, that you made this payment. Now, why doesn't the accounts receivable person get the checks? What would be the problem with doing that?
Because you would need the actual checks to deposit the money in the bank account or pay it.
Exactly.
So the cash.
And notice what could happen. If you give the accounts receivable person the actual checks, what's to stop them from putting it in their pocket, opening up a bank account that looks similar to the custom companies and putting it in, and then you go, okay, well, wait a minute, if it didn't get credited to their account, what would happen? Your accounts receivable clerk, you may have the ability to write it off. You shouldn't, but you might figure out how to write off the account so no one would be looking for it. The customer wouldn't know. If you put that in your pocket and their account was credited one way or another, the company wouldn't know. Everything would look like it was fine, and they would have, you'd have the check. So you can make it disappear on the accounts receivable, and you can make the actual check disappear. I actually worked at a company where a woman did this for years. She was the she was the secretary for the plant managers, and every plant manager that came through had her as a secretary. She started working at the place when she was 17. She was the longest serving employee we had when I was at Navistar. She had worked for 45 years at the same job. And when I think she was, I forgot how old she was. But anyway, when she was in her 60s, she complete accident. One of the finance people found out that she had an account. The account, they couldn't figure out how much she had taken. The account went back so far that it was even before computers. So, they never really figured out even how far back it went, but she had an account set up for decades. And whenever a check would be sent to the manager's office and sent it to the mailroom by accident, she would send a memo down to the accounting department to write off this account. She'd take the check and put it in her bank account, and once a year or whatever, she'd empty it. And they didn't find it for decades. I think she was like in her 60s or something like that when they finally found it. But anyway, they just had her retired. But she'd worked I think, for 7 plant managers, and no one found it. But again, she had access to the check, and she knew that plant managers could write off accounts, and she would forge those to write off the accounts. And it was never picked up for decades. Okay. Now, don't you guys do that. I'm just saying, all right. So the checklist, the other one will go to the cashier. So the cashier gets the checklist, and the cashier will make the deposit slip. And the checks and the deposit slip will go to the bank. Uh, Okay, now I want to show you something though that's important about this, and that is when you're actually looking for an individual check. So let's say that there's a problem with the 123 check. And so you're wondering, gee, someone asked, gee, it never got to whoever's account, Joe customer, it never got to Joe customer's account. Where can you verify that check that it was put in? Can you look at the bank statement? No. Looking at the bank statement, you're just gonna get a total deposit. They're not gonna break it out. So this is gonna be the total deposit. There's gonna be cash in there. There's gonna be checks. Joe customer's check will be in there, but there'll also be other, could very well be other checks in there. There could be a whole bunch of stuff. You're not gonna find Joe customer's check on a bank statement. So what do you have to do? You have to go to the checklist and make sure that it is on the checklist. Okay, now let's see if we can figure out who stole the check. Suppose one of the people in the mailroom, like me and his name was John. Me and John, the mailroom. Suppose one of us took the check. How would we find it? How would they find that? So this person sends it in. Now we could do something really stupid. If we put it on the checklist and we don't give it to the cashier is going to say, "Hey, where's this check 12345?" Right? So we'd have to not put it on the checklist. And by the way, we'd both have to agree on it that we aren't going to do it. But we put it on the checklist. So if we don't put it on the checklist, what you'd have is then have the customer figure out where it was deposited. So say, okay, well, what bank account did it go into? Oh, it went into the 7-Eleven bank account. Someone cashed it at 7-Eleven and blah, 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 whatever. So you would then find, you go contact the customer and see what, what they did. If the cashier took it, it's not going to be on the deposit. Your deposit slip will not match up with the checklist. So if you check your checklist compared to the deposit, you can figure out what happened to the check. Probably the cashier took it. Yeah.
Even it's not going to be on the deposit base, but it's going to be on the checklist.
It should be exactly. The accounts receivable should match up to that also. Yep. And one of the things that they do is they match up the accounts receivable in total to the checklist too, is another control that they'll often do. Yeah.
Does that mean end of the month to do reconciliation checklist one, checklist two, and then the microphone.
A good controls, they'll check them every day. A good control, the checklist and the deposit slip should match up every day. Yeah, I worked at a place one time that, for not very long, but I worked at a place where they had bundles of cash sitting on the counter along with the deposit slips that they just hadn't put in the bank yet. I couldn't believe it. They literally had like, I don't know, $20,000 of cash sitting on a bench in the place. But yeah, they should make the deposits, and those deposits, any checks that they get should be matched up with the deposit slips.
What of the
No, good question. Like the cashier. So this would be, this is another one. Cash that goes through the cash registers. Usually, if someone does come in and pay cash, like at a bank, they'll come in and pay cash for their bank loan, whatever that. You should go into the cash register, and there should be a receipt for it. For the customers, you get a receipt. And by the way, giving a receipt is also a control. So you go to something like fast food restaurant, they'll say if tell us if you don't get a receipt, and we'll give you something free or I don't know, whatever. And that's why they want people to get the receipt, because if you're working at the window at, say, McDonald's, after about a day, you know how much a Happy Meal is. So when someone pays you, you can ring it up, and then immediately cancel it out if you have that ability, or even a manager could ring it up and cancel it out. And pocket the money. So that's why so one of the things about giving receipts is that not only is it, as a customer, you want your receipt, but it's also a control for the company to make sure that it's actually in the system, that someone's not taking money out of it. And I'll tell you one thing that was kind of funny when I was growing up. I worked in a bike shop when I was 14. I don't even know if you could do that nowadays. But I was 14, I started working in a bicycle shop, and they had us working the cash registers. And they had 3 14-year-olds, and they said, okay, these 14-year-olds, they're learning bikes, but we can have work the cash register, then the people that can work on bikes can work on the bikes. Bad idea. Because we had no idea what we were doing. And so these cash registers were old, so if a customer would complain, they print out, I can't really read this. You go to the next run, bring it up, print it out, and they, okay, I still can't really go to the third register. We had access to all the registers, and many of the things got rang up several times. In fact, there was like 2 registers in the place that actually worked out of the 5. Long story short, they thought we were stealing money, and one of the managers was like, "Wait, we could have sold this much stuff. There's no way, we could have sold this much stuff." And then you notice that the timing on them was about the same. He's like, oh, why is the same thing being rung up on 3 registers in 45 seconds? And then you kind of pieced it together, but we didn't know what we were doing. It was a lack of control. But the registers should keep track of the cash going in. Receipts should be given to the customers to show that that the cash has gone into the register. There usually should be controls over giving refunds or canceling orders, because a cashier could cancel an order and then put money in their pocket. There's actually quite a few controls over cash. Now, having said that, do errors happen? Yeah. The error rate is usually about 1 in 100 for things like cashiers and stuff. And usually they go in both directions, plus or minuses. But so there is a natural error rate in there for especially like retail and stuff like that. But anyway, yeah. But here's the thing about the bicycle shop story. That during that period of time that those 14-year-olds, who didn't know what they were doing, were working there, someone could have been stealing cash because those controls were not working. No one told us, when you ring up $10 on this register, there has to be $10 in this register. And then if someone wants a receipt, you write it by hand or something, give them a receipt by hand that was in there because it's counted in that register. Again, these are the controls that they have, and over things like registers and that. And controls, one of the things that can ruin them are errors, you know. You have 14-year-olds that really don't know the controls they can have. Okay, so basically, they must be individual checks cannot be verified on the bank statement. They will only be in total, and individual checks, the checklist and deposit slips. Cash itself should match the registers, should be reconciled to the deposits. The deposit should be put in daily. Usually the thing. Okay. Let's go to the second page. The auditor needs to confirm a customer had submitted a check to the client. Which documents would the auditor likely examine? There's actually two of them.
The checklist and the bank statement.
Yep, yep, and yep. Well, it's a checklist and deposit slip. The bank statement will show it in total, and if it's on the deposit slip, the deposit slip should match up to the bank statement. But the actual check itself will show up on the checklist. The bank statement will show up in total for the deposit usually. If a customer's cash check was missing and did not appear on the checklist, who likely misappropriated? I love that term, misappropriated assets. It sounds so much better than stealing it. Who likely misappropriated the check? Yep, probably me. Actually, at the time I was too stupid, it wouldn't even occur to me. Yeah, so if it didn't show up on the checklist, and it was cashed, you'd probably start looking at the accounting room employee, see where the check actually was deposited, and see if that could be someone that it's possible it went to the wrong bank or something like that, and someone took it too. I mean, there's other things could happen. Okay, bonding of employees. What time are we at? Okay, we'll do. Yeah, let's do this. Then we'll go to the other stuff. Okay, bonding of employees. Employees that have access to cash will often be bonded. And all that is all bonding is insurance for the thefts of cash. So it'd be a bonding company is just an insurance company. And they'll say, okay, yeah. The bonding is for specific employees. And this is where the advantages of it really come in. The bonding company will they can do a couple of things. One might be that they will look at the controls. Second, and probably more important, are that they will they will look at, so it's not just that it's an insurance policy, but they'll also investigate employees that, each employee that handles cash. I wrote that kind of awkwardly, but anyway, yeah, and the way that that comes about is if there is somebody who has a questionable background, they just won't insure them. They'll say we can't bond them. You can still hire them and sell them with cash, but if something happens with cash and that employee, we're not doing anything. And that's usually a red flag that there's a problem. I've had a friend that worked at a place and they hired this guy, and it seemed like he had all the credentials, had all these references and everything else, and the bonding company said no. They said no, he served 3 years in prison for fraud, and we're not. You can hire him, but we're not going to bond him. And obviously that didn't come out in the interview that. So anyway, investigating employees that handle cash. So it does two things. Sometimes they'll actually look at the controls, the cash controls, and make sure that they are on that they have some control over it, and they'll help the company that way. But they'll also do background checks on employees, and those background checks are there to keep people who have past fraud, especially from handling cash. One thing I can tell you about people who commit fraud is that the citizen, I can't pronounce it. The repeat offender rate is the highest, I think, for every criminal category except for sex offenders. It's in the 90% level. Someone who commits a fraud, it's very likely they'll commit a fraud again. It's one of those strange things that happens all the time. So whenever someone has been convicted, especially of a fraud, it's a real red flag, because again, it makes it very likely that they'll try again. Okay, let's stop here. And we'll come back. We'll say be back at 7:10. Sneak a peek and see. We should be able to finish. Anyway, if we can finish this night. I don't think we're going to start on classical sampling. But we should get through this handout. All right. 8. Okay, lockbox. A lockbox is often used for collections. A lockbox is a bank, usually. Okay, so banks will often be used to collect the payments for their customers. Wait a minute. And so the payments are sent directly to the bank. Let me think how to say this. Yeah, okay. So um, so the custody will be collected at the bank. A checklist will be sent to the business, and collections will be automatically deposited. So they'll be collected. They'll make a checklist, send it over to the business, where business it is, and it'll be automatically deposited into their accounts. It's called a lockbox service because that's the way they used to be able to pay through what they'd have what they call a lockbox. You used to go to a bank and there'd be maybe they still do it, I don't even know. They used to have a thing that you'd make a deposit into it and it would be locked. And and so they would credit your account. So if you owed money to the bank, you could put it in there, drop off the payment. Part of that goes back to when they used to have banking hours. If you go back into like 60s and 70s, banks were open from 9 to 3. They call them banking hours, 9 to 3. They didn't have ATMs. They were never open on the weekend, and they didn't have any branches. If you wanted to make a deposit or get money out of your bank account, make a withdrawal, you had to take off from work, go to your bank. It had to be the one bank you went to between 9 and 3. And and people on their lunch hour, the bank would be lined up, around the block because people would be trying to get into the bank. So anyway, that's the way it was. And so they'd have these lock boxes set up so that people could just drop it off in the lockbox and they would get in that way. But the term still sticks around. So the bank collects it. The bank makes the list. The bank does basically everything that we do here. All this stuff is eliminated. Okay, which of the following is true regarding the lockbox for receipts?
It's B. The client's employees will never have access to the checks. Because as you said, I think the lockbox system is used to reduce the risk of theft and speed up the collections.
Yep, yeah, it does. It speeds up the collections because it's the deposit's automatic. You don't have to have someone make the deposit slip, go over to the bank, do it, all this stuff in between. Compare the deposit slips to the cash register tape and to the checklist and all that kind of stuff. There's no additional bonding at all. In fact, you can probably get rid of the bonding because your employees, maybe we're doing this, they don't need to do it anymore, and they'll never have access to the checks. So for that reason, it's a very common practice. Okay. Now, this is when we collect cash. Another way to take cash out of a place is to have them make payments to you. So accounts payable is also something we have to pay attention to if we're looking at cash, because maybe I don't have access to the checks coming into the place, but if I can get the company to write me a check, that would do it too. So we have to have controls over accounts payable or vouchers payable. These are exactly the same things, by the way. Accounts payable is when they are approved at the same time. Vouchers payable is when they're approved ahead of time, and then they go into a system where the voucher is paid. But they're exactly the same. Okay. Most companies use voucher systems. They get everything approved and they cut the checks once a month. Okay, what documents do we need to match up? The first one we need is a purchase order. Did we actually purchase it? Whatever they want us to pay for. Apparently, purchase order needs an R. Okay, so purchase order. And the purchase order could be, whether it's a service or it's a physical item. You gotta have a purchase order. And they'll have all the approvals and all that kind of stuff. You have to have some kind of receiving report. Was it actually sent? And lastly, you have to have the vendor invoice. The vendor invoice should match. Oh, let me ask you what it should match. Should the vendor invoice, should it match the purchase order or the receiving report?
I think
Which
it
one?
should contain both information. Receiving report, we should have the quantity or physical good. If it's a physical good, or purchase order would have what they ordered, and invoice would have what everything.
Yeah, they may not have sent everything. The purchase order, maybe there was they were out of stock on a few things. So we wanted to match the receiving report. What they actually sent is what they should be billing us for. So this is what was actually sent. Received, I should say. So the vendor's invoice should also be for what was actually received. So it won't necessarily match the purchase order. We had an auditing book one time that said that the vendor invoice has to match the purchase order, and that's not really the case. Not the book we're using. The book we're using, by the way, is a fantastic one. It's the people that write this textbook are the same ones that do the Wiley CPA review, and everything in there is basically similar to the CPA exam, which is why we use it. Okay. So the receiving report and the vendor invoice should match up. If we ordered 10, they sent over 8, we should get an invoice for 8 of them. Electronic Funds transfer, we kind of, everyone knows what this is nowadays. It used to be, everyone does Zelle now, so I don't know, we need to put this on here anymore. But, yeah. Funds are transmitted electronically instead of using paper. And again, this is a tremendous amount of, almost everything's really, and in business, from one company to another, this is absolutely required. Back when I graduated 30 years ago, there were many companies that will not write paper checks. They won't write paper checks, they won't receive paper checks. All right. Bank standard confirmation. And this is kind of fuzzy, but that's not all bank confirmation forms are. A standard bank confirmation form. So confirmations. Standard bank confirmation form will list all cash accounts, and all details of loans with the bank. I stole this from a book, I think. I can't remember where I got it. Anyway, so they'll have the bank accounts. So for here, boy, is this bad. I gotta get a different one. They'll generally show the bank account, how much is in the bank, what interest rates they're paying. They'll have any loans. Those loans will have, I think it must have happened when I pasted it in here. I don't remember it being this blurry. No, maybe it's just my eye. The bank it'll show what the loan is. It'll show the rate of the loan. It'll show if there's any collateral for the loan. And so this is what a standard bank confirmation form will do. Now, it's not like a regular bank statement in that they don't have all the transactions. It'll just be what is in the cash account at the end of the year. It does not show the pluses and minuses. You're not going to see deposits on it. You're not going to see payments on it, outstanding, checks or cleared checks or whatever. None of that. It's just going to show at the end of it's kind of like a snapshot at the end of the year. What do you have in cash and what do you have in loans? It's all based on cash. Okay. Which of the following can be verified by a bank confirmation, standard bank confirmation? There's actually 3 of them. What? Yep. And this one, the collateral pledged will also be in there. They're not gonna have the daily transactions. They're not gonna have the securities and investment accounts. Those are usually something that's done separately. And, you know, those are often things that, while they will have a balance at the end, it's not like a cash balance because they haven't been sold yet. It's not like you can withdraw them or anything immediately. So those are things you find in a bank confirmation. Okay, year-end bank statement. Now, so the year-end bank statement will be sent to the audit client. And we, audit client, whoever your client is that you're auditing, let's say IBM. I'm just making that up. Suppose IBM is we're auditing IBM. IBM will get their bank statements. The auditors will have the bank statements will have the bank statement sent directly to them. So this is a very common practice. At the year end, the company, obviously, whoever you're auditing, they will get their bank statements. But the auditors will also have the bank statement sent directly to them. It's a standard form if they fill out at the bank that says, by the way, send our bank statement to the auditors directly. And why do you think auditors do that? Why do the auditors want those sent directly to them instead of just, the client has them, why don't you just take what the client has?
It can be manipulated.
Yeah, they could be altered in some way, changed in some way, and quite honestly, nowadays, you could probably make it pretty convincing that they were, that any changes that they were actual bank statements you're looking at. Anyway, these are, so they have them sent directly to the auditors. It's a very common practice. Now, the company will use their bank statement to do a bank reconciliation. Yeah. What was in there? Nope. You may be corrected. It knows I'm illiterate. Okay. The client will perform a bank reconciliation based on the bank statement. And by the way, when you take the auditing part of the CPA exam, you'll also go over doing a bank reconciliation because sometimes they'll have, the bank reconciliation say, what's wrong with this bank reconciliation or something like that. And basically, you're trying to find the corrected balance. These are what you're trying to find for the bank reconciliation. How much cash do they actually have? And basically, you correct the side that doesn't know. So for instance, deposits in transit are deposits we made at the end of the month. We know we made them, the bank just hasn't counted them yet. We could also have written some checks that we know we wrote, the bank doesn't know that yet. On the book side is almost all the stuff, most of the stuff will come off the bank statement. You know, this is gonna be bank statement kind of stuff. Let's make it blue or turquoise. So a lot of times this kind of stuff you will get on the bank statement. You know, electronic funds transfer, that's not gonna be in your checkbook. You didn't write a check. Collection of a note will often not be, you know, something they'll tell you immediately. They'll show on the bank statement that you got it. Interest income, you don't know what that is until it shows up on the bank statement. So a lot of this stuff, all the stuff on this side is stuff that basically the book doesn't know about, and you have to correct the book. So the book shows that they have 1950 with, they really should have 2115. All of these will be journal entries. You'll make journal entries for all of these. And because of that, you know, this is why accounting does the bank reconciliations, because journal entries will come out of those what are we doing here? There we go. So there'll be journal entries made for each one of these so that we can get to this corrected balance at the end. So the bank reconciliation isn't just something we do just to make sure everyone's on the up and up. It's also something we do to make sure that our books are their books are correct. So they'll be doing these bank reconciliations. The bank reconciliations are also pretty much required by law if, you know, generally a bank, for instance, let's say someone's forging a signature on a check or something like that. Anything that could have been caught by a bank reconciliation, you basically have a 1 month window for the bank to be responsible. So let's say you have someone forging a signature on a check and it would have been caught if they did a bank reconciliation, but the business didn't do a bank reconciliation. After the first month, the bank is no longer on the hook. In the past, it used to be, hey, if there's a bad signature, it's up to the bank to catch it. The new rules, I shouldn't say new, they're probably like 15 years old or something like that, but they are that if the fraud would have been caught with a doing a bank reconciliation, the bank should have caught the first one. Subsequent ones that would have been caught after the first month are considered to be not the bank's responsibility. That it's a common enough practice that it should be expected that they are doing a bank reconciliation. And there was lots of companies that weren't doing that. I worked at Navistar and we had a whole big project of, I mean, the main office, they always did them, but we started going around to some of the other offices and a lot of them weren't doing it. Okay. Blah, blah, blah. Last thing we're going to cover is the cutoff bank statement. The cutoff bank statement. Is a bank statement is created usually 7 to 14 days. Don't put that one down. That's my mistake. 7 to 14 days into the 7 to 14 days after year end. example. Year end is 12/31/2025. You could get a cutoff bank statement. So 1 dash, say 10/2026. So you maybe go 10 days into the next period. You have a cutoff bank statement as if it's only for the first 10 days of the next period. And this is sent directly to the auditors. I'm having trouble with this keyboard for some. And again, this is another absolutely common practice, cutoff bank statement. They're sent directly to the auditors. And what they will have then is an idea of what items to basically verify oftentimes the things that are on the bank reconciliation, but there's other things they can find too, and we'll talk about those. But for instance, these deposits in transit that were done on 12/31. Well, 10 days into the next period, they should appear on that bank statement, right? If these were actually deposits that were made, they should show up here on this 10th, by the 10th day of the next period. The same thing with these outstanding checks. If there's outstanding checks, these are checks that haven't cleared the bank. 10 days into the period, they probably should be there, or most of them anyways. So that's the whole idea behind the cutoff bank statement. It can do a lot of things that, for verify the bank reconciliation. Another thing it can do is find liabilities that were not recorded. Because, for instance, I get a phone bill. I don't want to put it in the system because I know it's going to make us look less profitable. So I take the phone bill and I put it in the desk drawer. I don't enter it in the system. Now that phone bill still has to be paid. So it's probably going to be paid in the subsequent period. Anything that's paid within, say, the first 10 days of January probably relates to something that was purchased in December. Or was should have been on the books in December. It's possible they weren't, but most of the stuff should be, and you can trace it back and see. So if they are hiding liabilities, you can find liabilities on the bank statement. You can also find stuff about kiting. Kiting is something that doesn't happen very much anymore. It used to happen a lot more. There used to be a lot of float, what they call float in checking. In fact, I used to teach it. Up until this term, I taught it. It's not nearly the problem it was before because now a lot of the stuff's done electronically. And clearing of checks is much quicker now. It's within days rather than, it could be several days in the past. What kiting was making it look like you had more cash than you did. It usually involved two banks. You'd have a bank account in two banks. You'd write a check and pay the one bank with a check from the other bank. Initially you say, well, how stupid. It kind of was, but here's the beauty of doing that is that the bank that receives it thinks that cash is there and will, you may very well credit your account. The dispersing bank won't know about it. You'll have money in both those accounts. It'll look like you have a lot more money than you really have. It's not very common anymore, but you can find it on a cutoff bank statement. Okay. Oh, I just said this. All right. Which of the following can be verified by a cutoff bank statement? I was gonna write. All of, yeah, all of them. Trading's kind of rare nowadays. I guess it's still possible it could happen, but not nearly what it used to be. Okay, let's do a bank reconciliation cutoff bank statement exam. And you will get one of these on the test. Okay. The ABC Corporation pays employees on the 28th day of each month. The last payroll of the year was on 12/28/25. Excuse me. And so these are all the checks that did not clear. These are outstanding. So these are the checks, the payroll checks that didn't clear. We gave them to the employees, and for whatever reason, they didn't clear. Okay, we get a cutoff bank statement. Here's our cutoff bank statement. Now, most of these should clear, right? This is our cutoff bank statement. So what we're going to do is kind of go through and see which ones of these checks cleared down here. Okay, so for instance, let's take this first one, the payroll check P, it cleared. Yeah, you're right, it did clear. Okay, so let's see, I tell you what, if they clear, we'll make them green if they clear, how about? $17,817,894. That one did not clear. $17,815. That one did clear. $17,897. That one did clear also. But you might be checking this to make sure the check amount is the same. Probably not a big concern, but $17.99, that one cleared. $17,900 also cleared. As did $17,903. Okay, well, so this is what we got. Yeah, make sure you check mine and make sure I didn't do anything wrong. I've never made a mistake in my life, but you never know when that first one's gonna roll around. Okay, so let's look at this, and there's actually quite a few problems with what we just looked at. I shouldn't say quite, there's actually two big problems of what, oh, yeah. What do you see about this that's concerning? Now, there was one that didn't clear. They don't use it. You'd probably have to look in to see why that is. It could be someone's on vacation or something. It could all be. You might want to look into that one.
Could it also be that effort bound?
It could be. It would.
Yeah.
The bank account balance would be under zero if that were to happen. It could. It could be. I would assume it's unlikely, but it could be. They tried to cash check and they couldn't. That would definitely be, So we definitely have to look into that one though and see what's going on with it. It could just be someone that doesn't. I worked with a woman that came from a very wealthy family, and they were always asking her to cash her checks because she never needed it. But yeah, so anyway, we would definitely want to look into that one and see. There's actually a couple more problems that we see here, though. What are they?
There are 3 extra checks that cleared that should have cleared earlier.
Yep. These checks down here. Notice that these were not on the outstanding checks. They cleared in early January, but they were not on the outstanding checklist. Now, it's possible these checks could have been written in early January, January 1st or something like that. However, it would be very unusual if on January 1st, whoever these are written to earned this kind of money from one day's worth of work. If they were paid these in January, it probably has to do with something related to the previous year. If these were. Not only that, we have this. They pay employees on the 28th day of each month. Last payroll is on, but there's no way that these were written on January 28th because they cleared on January 2nd and 3rd. What other evidence do we find that this may not be 100% correct?
Could also be that maybe these are contract workers on the payroll, and so they need payments in advance.
I'm sorry, they're what?
Saying that it could be that, the last 3 checks that were cleared are for contract workers on the payroll who need payments in advance. So,
Well, but if they're working on the payroll, they should, if they work for the company, they should have been paid with a regular payroll. If they're somebody outside the company, then that wouldn't be a payroll check. That'd be a regular check to a contractor. But there's things that could have been, and it would be very unusual to have these kind of payments made though that didn't relate to something that happened previous, that would happen the month before. And if it was what you were saying, then it is possible, I guess, that these could be advance payments to somebody. But again, you probably have to look at it. But if they're payroll checks, payroll checks are generally checks that are done through payroll. You get payroll deductions and everything else taken out of them. You get FICA and all that kind of stuff. Something if you're paying a contractor, you're probably not gonna be paying those.
Professor,
Would that,
um, so speak back.
would those be like a bonus or commissions?
They could be, but again, it would be unusual if those didn't relate to the previous month.
Yeah,
And here's another thing though, if you look at our checks up here, yeah, you can see that this rule about doing it on the 28th of month is obviously not something that they stick by religiously. Because there's this evidence that they actually wrote checks on the 14th. Now, again, that could be that, someone quit or something like that, or left or whatever, and, that they gave a final check or whatever, but they certainly have the ability to do it, to run the payroll and to do it not on the 28th. So there's a few things that, would raise concerns about this. The thing you were looking for, that these checks cleared, probably, I wouldn't say is the least of your worries, but it would be certainly one of those. It wouldn't be that unusual. It's not that unusual to have people that don't cash their check. I know it sounds odd, but it does happen. Yeah, so there's a few things that pop up here, and the clearing of the checks. Don't do that. The clearing of the checks for the bank reconciliation is certainly one of the things you test for. And again, I don't think this would be that unusual if you had one of them that didn't clear, but again, you probably want to look into it and see what happened. And certainly you want to see what's going on with these and why they are writing checks in between, the 28th of each month. And just to let you know, like a lot of times when they're running off, if you have them running off payroll checks, they'll do them in batches. We run them off once a month. We put them all together and we run them off. A lot of times they will fund the bank account for the payroll checks or the exact amount, so there isn't extra ones thrown in there and all that kind of stuff. And by the way, when you're talking about, actually, no, when you're talking about a check bouncing, if they had a specific payroll, that could actually be a problem, because sometimes they'll fund the payment from a bank account that is only funded to the total amount of the payroll, and is to catch checks that are, when there's more checks written than there should be. So for instance, let's say the payroll is $11,000. If they get $12,000 of checks in, it's going to bounce, and they're going to know there's a problem because somebody has slipped in an extra $1,000 check in there. Okay, so let's see. The problems are one, checks that cleared. The cutoff bank statement. Oops. And we're not on the outstanding checklist. And again, you're going to look into these and see what happened. These are things that in auditing, they say that you're clearing these. You'd be clearing these problems. Thing where they actually went on with them. And again, you don't know until you actually look in them. Second one. I should say, the payroll checks are being written between the usual 28th day . of the month. And part of that too could be a problem because, again, there's sometimes our controls over them, over the writing of payroll checks, the printing of them, that may not be being adhered to when you do it in between. And again, we know that they did it at least once. We don't know what the story is on that. Probably want to look into that, and then just also see on these. We may also look at the check that didn't cleared. Yeah. Okay. So one of the checks didn't clear. This one. And you may see why. I mean, it's not. I would say it's probably not unusual, but it's something you want to look into. You don't know what it is until you look into it. Could be something serious. Okay. Question on that? Are you guys all funned out? Because I am. So I think what we'll do is we'll have you guys submit this into under assignments and exams. I'm just gonna make this bigger. Yeah. Okay, don't do that. All right. So assignments and exams, you're gonna just go in here, click on this. Hopefully yours looks better than mine here, but create a submission, upload files, probably what most of you will do. You also create it separately. You don't need to do that though. Just upload the files here. It could be pictures, could be screenshots, could be the documents themselves, however you want to do it. Fine with me. And put those in there. And I'm going to send out an exam on chapter 10. I'll send it out tomorrow. And it'll have some multiple choice questions, and it'll have we'll definitely have one of these. Nope, not that. We'll definitely have one of these on it. And probably there'll be a few multiple choice questions on it. Probably the rest of them pretty much will be multiple choice questions. There might be an essay or two in there, but anyway. And again, I should have that done. I'll have that sent out tomorrow. Any questions?
And so
All right, so I'll be taking the attendance off the sheet here and in the classroom, and I will talk to you guys later. Have a good evening.
Yep, you too. Bye, Professor.
I just gotta check the,
Good night.
good night.